a lot of stuff is out of our control, right? I think being in small business, you want to control the input, the work that you're doing, the conversations that you're having, the sound decisions that you can make on approving loans versus not, or structuring deals in a way that makes sense for what you feel are the investor side, and then also the borrower side. So you can control the input, but just because you control the input doesn't guarantee an output.
Welcome to Discourse with Christian. I'm your host, Christian White, and today we have Corey Siegel. Corey is the co-founder of S&L Capital Group. They're based in Southern California, and Corey possesses a background in sales, in finance, and he spearheads their private lending endeavors. And Corey here today is here to share with us his journey, his experiences, challenges he's had to overcome, and what his current thoughts are out there in the marketplace. Corey, thanks so much for being on.
Oh, thank you. Thank you for having me. Let me wish you a happy Valentine's Day. I know it won't get released today, but you're in my heart, buddy. Thank you so much for having me.
Well, it's awesome to have you on, and I'm looking forward to us, or I should say, I'm looking forward to hearing your story more. And I know the last time we connected was in Crystal Cove for the commercial real estate event that we put on late last year.
Yes, that's right. And that was what a great event. I think I was made aware of that event through Skylar, and I know her through Crew Orange County, and kind of saw that her and Danielle were involved in that event. And what a packed room. Such great information there. Always try to learn. I was engaging with somebody on LinkedIn yesterday, Dylan. I think he was on your podcast as well. And he mentioned a phrasing of kind of a question that he would ask a broker. And I said, man, that's a really great way to ask that question. And he said, oh, kind of half joking, don't worry about it. You don't need to take tips from me. I'm just a new guy. I'm like, no, that's not. We always have to learn. And if you hit something on the nose, you gotta make sure that you recognize it at least. So, that was a great event in Crystal Cove, a room full of pretty awesome professionals there, and a lot of valuable information. So it was nice to put a face to the name. That's for sure.
Yeah, and I was going to mention, you mentioned Skylar. I love how she's curated such an audience on X.
Unbelievable. She had been talking to me about her kind of endeavors into X for probably a year or so. So I see her at a lot of Crew Orange County events. And, when I first sat down with her, she was like, are you on X? And I'm like, no. She's like, oh, you just got to do it. It's crazy. But I always tell my friends that I'm not the same person on X as I am in real life. So I took that as a little, promiscuous type of stuff. But it's pretty fun to see the personality of people on X. And it's a little more feisty than your LinkedIn. It's a little bit more unfiltered. And I would just call it like thinking out loud. So, if you give me a follow on X, you'll see some pretty odd things, but nothing out of taste or something along those lines. It's just kind of a fun thing to do. My wife still doesn't even really realize how crazy it gets on X, and I don't know, how she would think about it, but it's kind of funny when you look at it that way.
Well, speaking of the differences between X and LinkedIn, I obviously only put out information that is very almost corporate-y, very safe. Right. It's, people are very polite on there. It's not like X or an Instagram where people are just, they'll hide behind these accounts or whatever.
So, it's funny you mentioned that. I think ultimately what I want people to try and understand the type of person that I am, not personally, professionally, like limiting on that. But like, for instance, if you're a broker or you're a client who wants to work with us, I want you to get a kind of vibe or a feeling about how that process is going to be. I think there's definitely time for that corporate feel. I think there's important topics that need to be discussed seriously. I also think like we get into this little bit of a rat race with businesses that we run or businesses that we work for, that everything is just so buttoned up and serious, right? And again, there's nothing wrong with it. It's all about style, whatever your comfort is. But for me, I need to have a little bit of humor. I need to have a little bit of, messing around. I need to have a little bit of, relaxed atmosphere. I want to make our clients know that the process is going to be stressful, but we can enjoy it, And so I on the social media side of things, like I tend to keep it a little bit more light. try to be a little bit fun. I laugh a lot at some of the stuff that I post. I don't know if that is an effect of me having, dad jokes and dad humor with my kids and all that kind of stuff. But I have no shame. I can laugh at my own jokes because when people laugh at me, I make fun of me, I'm okay with that too. So, but I just try to keep it a little bit more light. I think there's plenty of space to be buttoned up and professional, but I want people to kind of understand what we're all about and kind of what you would expect from us if you're, sitting down having a coffee or a beer with us or something like that.
Well, that's one of the things that I think is awesome about shooting podcasts and stuff is it gives it tends to be more of an authentic discourse and such, and you really get a feel for people, and you might get some colorful language here and there, as opposed to like some 60 minutes interview or 2020 or whatever, right, where it's highly sanitized and scrubbed, and this is edited out and that.
I totally agree. I mean, I think ultimately speaking, in a long form type of conversation, things are going to come up. We'll probably, we started off having a little conversation before camera came on and get into a little bit of a groove, right? I think ultimately it's hard to fake, who you are and what you're about. And it's pretty easy to do in a 30-second clip. But in a long form conversation, may not be the cleanest. I was joking with my business partner, Brad, he did drop quite a few F-bombs in his Discourse episode, and he wasn't even aware that he was doing that. And so I think it's kind of hilarious, right? For that third person perspective of like, all right, I get it. You want to be loose with it, but, button it up a little bit, right? But it was just kind of a funny thing. I don't care. However, as long as it's good information, honesty, and communicative, there's nothing wrong with saying, I don't know. And, Brad and I kind of have a feeling like, let's find out the real answer and share what we know. You can't really fake that over a long period of time. You got to be pretty honest with people and, not sugarcoat things the way that we see in traditional media that I think is, clearly on its way out one way or the other. One way or the other it is, yeah, for sure.
Well, I remember, I think it was Musk mentioning, legacy media is dead.
I don't see how, unless they change their strategy about attracting our demographic, right? I mean, I think as the demographic gets younger and younger, the information is available. You can vet things. You can, the filibuster answer is not really something that we put up with. Maybe it's our generation or the generations younger than us that is just a little more stubborn in the sense of like, that politician's answer that doesn't answer anything is like, you can smell that BS from a mile away. And what was once accepted and grandstanded on, I don't believe that the younger generations really put any more weight onto something like that. And so that's where they got to find a different strategy to give less opinions about what they think is right and wrong and more information in a very true form and fashion. I mean, I think it's really that's where the long form podcast, whether it's, Lex Friedman or Rogan or Diaries of a CEO or, Breaking Points, some of those things, it's like you get the real kind of details and nitty gritty of something. And there's an opportunity to question. There's an opportunity for clarity. You don't get that in traditional media. It's less about clarity and more about what they want to tell you is right or wrong. And I'm not really interested in that. I'm not really interested in that at all.
Yeah, I wanted to comment on that before we eventually obviously talk about your story and S&L. Yeah. It's amazing how it's been democratized. How, I mean, I'm right now I'm in Clovis, California, which is in the middle of the state. I'm not in some major metro, but the fact that we're able to have a dialogue 400 miles away, give or take, and I'm able to have guests on from New York. I've had people on from Switzerland. Where else did I have another person? I mean, just all over, and you're able to disseminate information. It's really fascinating, and especially the influence that creators have, like Rogan or Taylor Swift. How, I mean, it's incredible. They have more clout than heads of state of nations.
Than Don Lemon had. Like no, I think it's equally right for both sides, right? I mean, so not even to talk about like political swaying or anything like that. I think it's a true reflection of what people want to hear. I think the most recent election was probably the biggest case in point about that. I think people wanted to know what was going on. And for better or for worse, whether you like him or you don't, whether you really like Kamala or you don't, again, to me, that's indifferent. I'm as center down the middle as it possibly can be. You knew what he was going to do, and there were questions about what her plan was. And that's really what it came down to, was that it was unclear on one side and it was very clear. And for the very clear side, there were people that could make decisions that I hate what he's saying, or I really support what he's saying. And I just feel like the news clips, newsworthy stuff is really kind of going to be washed out over time. And technology makes it easy to have long form conversations. It makes it really, really important. There's so many people that do great work in every industry, in every area, that have differing perspectives, right? I mean, the podcasts that I listed out before, some people will call a couple of them conservative, some will call them a couple of them liberal. For me, I'm interested in hearing the perspectives of everything, NPR in the morning, right? Stuff like that, where you can really understand that all of these objectives and subjects that we think about are determining our future really are, it's a pecking order of importance for every individual person. So what may be on number one, the first rung, that's the most important to somebody else, may be on rung 3, 4, or 5 for a different person. And the sooner we kind of understand that you're not defined by your politics, but you just prioritize certain things over others, we kind of get to a point where we realize nobody's really bad. We are more alike than we are different. And it's important to just kind of get back to, like, it's okay to have differing opinions, right? Just learn maybe the perspective that person is having. And so, I don't know. We've had a crazy decade, right? I mean, it's not even decade, since 2020. It's been pretty wild how the sentiment has changed. And we just got to get back to understanding that we're all American, we're all people. And if your opinions are different than mine, I'd like to know why. And I can respect your opinion. Like, that's really all that matters. But things have gotten off the rails a little bit. So not to get down the political hole too much,
Well, I wanted to ask you, as it relates to obviously a lot of the changes that have gone on, especially since COVID. Kind of, what's your kind of market sentiment, or even like geopolitically, if you care to comment on
Yeah.
that as it relates to today?
Yeah. I mean, I think the biggest thing that Brad and I have evolved over the last, I would say, well, interest rates really started getting away 2022, end of 2022, 2023, right? What we saw was a lot of stuff is out of our control, right? I think being in small business, you want to control the input, the work that you're doing, the conversations that you're having, the sound decisions that you can make on approving loans versus not, or structuring deals in a way that makes sense for what you feel are the investor side, and then also the borrower side. So you can control the input, but just because you control the input doesn't guarantee an output, right? I think that's something that is learned over, I kind of use the analogy of like calluses on your hands when you're working out. You get calloused over in business because you have gone through it, and you run through the whole situation where you expect the work to give you and yield you a certain result, but there's no real guarantee that that's going to happen. And so when, since 2020, ultimately, I think us, along with pretty much everybody in the world, March, April, May, thought the world was going to end. Like, everybody's going out of business. Real estate was very much in question, and until it became an essential industry, which is odd. Real estate being essential, you can still sell homes, but that was a decision that was made, and interest rates were kept superficially low, and the effects of what happened from COVID in a real estate standpoint, I would say, was pretty much the opposite of what most people were calling at the time. There was fear, but the market appreciated like crazy. Borrowing money was so cheap and so affordable that it just became a little bit of a frenzy. And that's not a normal market, right? When you have such low supply and such high supply of money, I think that's probably low supply of properties and such high supply of cheap money. I mean, I think it was just kind of this perfect combination. So what our perspective has been going through COVID, you kind of realize real quick, like, you can't really control what's going to happen. And a lot of times when you think something's going to happen, the opposite can. So all we can really do from our standpoint is continue to control that input. And that input may not pay off in a short period of time. It may be a long period of time. And so we kind of came across that as well when interest rates went up and transaction levels went down dramatically. And I wouldn't say necessarily we've recovered from the number of transactions going on in the market right now, especially on the commercial side. But we just took that approach in saying there's always going to be a need for capital. If commercial banks and commercial lending has tightened, there's going to be even more need for commercial bridge and private institutions, private money to be able to help people acquire or reposition an asset to wait it out until commercial loan becomes more available to them. And on the residential side, people always need places to live. So transactions down or not, we have literally kind of pivoted from the potential of thinking like, oh, there's not a lot of transactions going on, like, what are we going to do, to like, just get down and control the input. Control the input as much as you can, get out to as many meetings as you can, share the word as much as you can, be visible from a marketing and advertising standpoint, social media, be out there so that when people have a need for what we do, they know that we do it. And that's kind of where I would say we have tried to really focus, is regardless of an up market or a down market, just keep putting in the work. It's not necessarily going to guarantee an output, but at least we can control what we can control and never take the victim approach, right? Where there's no transactions, what am I going to do? Go find them. You just got to go and find them. And so that's the biggest shift that we've had over the last 5 years. I think we'll continue to see, I wouldn't necessarily say a tightening of the belt on the commercial lending side of things for more permanent debt side of the business, but maybe the belt is just staying kind of as tight as it is for a little while. And there'll be a need for private money and non-bank loans available to investors and business owners who want to add real estate to their portfolios or move their business into those particular commercial spaces. And the residential side, there's still a demand, right? Interest rates have kind of plateaued, and whether they get better marginally or get worse marginally, I don't know. But we live in Southern California. We lend in California in general. And so I see the demand for people who want homes to stay pretty strong, unless something out of our control happens, right? Third World War or, a big time recession, stuff like that. But we can't control that. We can only control the input that we have. And that's what we kind of focus on.
Obviously, nobody has a crystal ball, of course, but I don't know if you care to share your take on the remaining of this decade, more or less. Any speculations that you have? I know you mentioned like a geopolitical event potentially arising. Any thoughts?
I mean, my only thought is that I kind of use this analogy with a lot of our residential investors. Not necessarily an analogy, but it's just kind of a saying. I think there's a perception that because interest rates went up so quickly in such a short period of time, that when they eventually do come back down, people are going to expect them to come down as quickly as they went up. I just don't see that, right? I don't think that is a normal kind of way that chart works, right? I don't think that it goes up 3 or 4 points and comes down 3 or 4 points in a 6, 9, 12-month period. So I do think that the next 5 years to a decade, I mean, geez, I hope I'm still alive and kicking. I hope my forehead doesn't get any bigger. And I hope that obviously that we're still writing quality loans and stuff like that. I just think that there's going to be opportunity. I think what we've learned from investors who have been very successful in our space, whether it's the residential or commercial side, is in an up market, it's competitive because everybody wants to be there. In a down market, the real smart investors get very aggressive, so it's competitive. And so there are opportunities there in either market. It'll be more and more important to focus on the purchase or the acquisition and the cost of that acquisition than I think it has been in the last 5 years and the next 5 years. And I think most people took for granted the amount of money you could make or lose on the acquisition price of a property. And so I see that kind of just getting magnified more. I think the investors that, whether it's residential or commercial, that really focus on trying to make their money on the buy side, and not necessarily so much speculation on appreciation or rates coming down. I kind of see those investors being the ones that take the most advantage of the opportunity here in the next 3 to 5 years. But to project it out in 10, I have no idea. I'm not sure. I think there's isn't there a meteor that's supposed to come, almost hit Earth here in 2035? So let's hope that one misses us. But, I'm only joking. So, that's not, yeah.
I was going to next ask you, as far as media sources. I mean, can you share with the audience how you go about procuring insights on the market, and whether it's rates, et cetera, or alternative
Yeah.
media outlets?
Yeah, I mean, for me, I'm a big follower of Nancy Pelosi trades. I really enjoy following in for her footsteps for those types of financial markets. Our loans aren't pegged to the 30-year or the 10-year. I'm sorry, the 10-year Treasury or SOFR. We're a fixed rate bridge lending company. So our investors, and we, in conjunction with us, Brad does a fantastic job working with our investors. We will kind of generate and drive where the interest rate will be for that particular transaction. We like to say, and Brad, may have said it before, but we're usually the last to increase our rates, and we're usually the last to lower them. So as we were, you look back at 2018, 2019, when money was very, very cheap, institutional money on the private lending side was really alive and kicking. Our rates were not necessarily as good as some of that institutional money that was in the sixes or sevens, but the rates were in the eights or the nines. As rates on the conventional side have gone up, more so talking about residential and such. And now they're in the sixes and sevens. Our rates have been in the tens, high nines, low 10, mid tens to maybe high tens, depending on the value add side of the project. And they've just been settling there for, the amount of time that it's been since then. We do keep an eye on the SOFR rate to be able to understand really, how CMBS or bridge loans, floating rate bridge loans are priced against what we're looking at. But we really do offer a slightly different product, even though that is considered a bridge loan as well as ours. Ours is a fixed rate loan for a duration of 12 to sometimes 36 months. And a majority, I don't want to speak for everybody, but majority of those, traditional floating rate bridge loans have terms in the 3 to 5 years with prepayment penalties and, a little bit more of a few more mechanics behind that loan. So we like to understand where those rates are, whether it's finding out from, CNBC every morning or Mortgage News Now for the residential side, or the Wall Street Journal, right? To kind of have an idea where rates are. So we know that when a commercial lender is saying, hey, we're priced at 300 to 500 bips above SOFR, we kind of know where that rate is, right? I went to California CREF, MBA, in Vegas, and I was at Starbucks talking to somebody. I think they were from Austin, but a really big nationwide lender. And what we do is traditionally known as private money or asset-based lending or hard money, right? It's kind of the underbelly phrase of what we do. And we were talking about structure. So I told him, where our pricing was and everything. And he goes, "Oh, so you're hard money." And I said, "Well, yeah, depending on what you want to call it today. Like, yeah, it's hard money today, private money, asset-based, however you want to do it." And I said, "So, but with your floating rate bridge loans, like what does pricing look like?" And he gave me we're 300 to 500 points above SOFR. I go, "Yeah, but dumb it down for me. What's the end rate into today? If we were funding a deal today?" He said, "Oh, about 9.5, 9.75." I said, "Welcome to the hard money space, buddy, because that's like a half a point, percentage point less than where we would be." So we need to know where those pricing mechanics are. And in our industry of real estate, whether it's the residential or commercial side, there's a really, really creative way to say the same thing. And acronyms are huge. Types of loans, you can differentiate by just the name of it. And so, we get our rates in our news, to kind of circle back. Sorry, I'm rambling a little bit on from our traditional sources, just to kind of have an idea. But it doesn't drive, when you see a positive move or a negative move in the 10-year, that doesn't necessarily have an immediate effect on our rates, long and short of it.
And as it relates to your involvement in finance, and in particular in the lending space, could you share with the audience some of the challenges that you've had along the way and things that you've had to overcome?
Oh yeah, I mean, so I graduated from Cal State Fullerton with a BA in business administration, and I minored in human communications. Just really enjoyed kind of like studying nonverbals, and I guess that may be the sales side of me. A couple debate classes just to kind of, pick apart both sides of the equation. Maybe that's why I'm a little more open-minded than some folks. Not, I mean, most people are open-minded, but I graduated. Took my last classes in December of 2008, and was working part-time at an equipment leasing and financing company. And I was working there for 2 or 3 years while I was in college. A buddy of mine wanted me to come and be an intern and assistant. So that's how I first kind of cut my teeth in the sales side of it after, working at shoe stores, by high school and all of that kind of stuff, just kind of always been kind of client facing. And, but the Great Recession, was happening at that point in time. So money became very missing in action, to say the least. It costs a lot of money. People weren't really borrowing. The stuff was pretty difficult to kind of stay in that industry. But I missed that industry because, like from my standpoint, when I was working part time, I was going to the meetings, the sales meetings every month, just to kind of see what it was all about. I was an intern. I wanted to see, what everybody was doing. They would present checks, and guys were making 5 figures, every month. It was crazy. I'm like, wow, I found what I'm going to do. I'm pretty good at this on a part-time standpoint. So now all I got to wait is till when I graduate and I can work full time. And then once I waited until I graduated to work full time, that's when the market really kind of fell out. And so I was in that space for a little bit, about 9 months, and realized like 100% commission job is going to be tough to, pay some bills and do all of my stuff. So I got out of that and kind of bounced around into corporate America a little bit, doing some international product coordination for the shoe company called Skechers for a couple of years. But I just realized I wasn't a corporate guy. I mean, I thought my whole life I was going to work in a corporate environment and, raise myself through the ranks. And you know how you are when you're 20, I'm going to be the CEO one day, right? And just realized that I'm the type of person that if you show me how to do something, I immediately think to myself, is there another way to do it, right? And I think there's a lot of people out there. And maybe the way that your manager shows you doesn't quite click with what you're doing, and you're thinking to yourself, like, I can improve this. Like, I can make this a little bit better. That doesn't really work in corporate America if you are not in a management position. I think if somebody comes in and asks you to do that specifically, you're in a good spot. But if you're a cog in the wheel, they don't really want to hear those things, especially if your experience is not quite what they asked for. So after kind of spending a couple years there to figure out what to do next, I reached out to a buddy of mine who was in real estate. Said, hey, Skechers, for people that don't know, their headquarters are in Manhattan Beach, and so going to the office every day is quite a treat. When you're walking down to the pier and having a sandwich or Wahoo's fish tacos, and looking at the ocean, and you'd see some people down there and kind of have conversations about, what do you guys do? I work in real estate. I'm like, wow, it's like Tuesday afternoon. These people are playing volleyball. Like, I want to do that. So I called my buddy. I said, hey, I want to get my real estate license. He's like, why do you want to do something like that? And I'm like, well, it seems like a good thing to have, and maybe sell some houses. He's like, okay, well, here's the information, but come and talk to me. Me and my business partner have had a company open for 5 or 6 years now, or whatever it was at the time, and let's see what we can do. And so I about 2 weeks later, I had already signed up for my real estate classes. I went out there and accepted a job to work at a hard money lending company that was based out of Los Angeles, and I was working with one of my best friends at the time, and his business partner, who I became friends with over the years of working with them, and kind of rose through that company from a standpoint of helping them grow in a way that they wanted to. And the sales part of it was interesting because I didn't really know what I was doing when I signed on. Like, I didn't have any real knowledge of what hard money was and how they worked with fix and flip investors mainly, and doing all of that. So education became something that was a requirement for me, right? So I utilized networking opportunities for me to not only meet people in the space, but take the educational side of it. I would go to the networking organizations that would usually have a presentation or a panel discussion, and just really dive and indulge myself into the vernacular, the and different ways for people to make money, even if it wasn't something specific to what the company I was working for could help with. And so that really expedited my learning curve because I was out there kind of pounding the pavement and meeting people who were actively investing. And so over about 5 or 6 years, we helped that company grow a little bit. And Brad actually came on board about a year and a half after I did and started working there as well. And then there were some changes in that company, and Brad and I looked at each other and said, "Hey, well, why don't we go out and try to do this on our own, right? And not commute 3 hours each day from Orange County to Koreatown and back and forth, and try to focus on a quality of life, And that's kind of how S&L Capital Group started, which is funny looking back on it because quality of life is all relative, It's when you're in small business, your quality of life can improve from a standpoint of the choices you can make. But man, oh man, when it's great, it's great, and when it's not, it is your problem. And so, you just kind of look back and you simplified the decision so much that, I think about the NVIDIA CEO. I think his name is Jensen Huang. He was asked, like, if your younger self knew what you knew today, would you go through and do NVIDIA again and start it? And he said without hesitation, no. He's like, because going through all of the troubles and the kind of roller coaster of what is expected and how you feel like you're not doing well enough and the rejection that you get, if I knew that was going to happen, I probably wouldn't have done it. And so it was a really interesting interview that I saw. We are not NVIDIA by any stretch of the imagination, but that kind of hit home because you don't really know. There's no way to prepare for it. So that was our journey to get to S&L Capital Group. We opened up in 2017, and we're alive and kicking. We've seen the COVID situation. We've seen escalated interest rates over a short period of time, transactions going down, building taking forever. And I think we are well positioned right now to be able to service the people that need what we're trying to do. So we're very excited about what's going to happen here in the future.
Love it. Love it. I wanted to comment on, quality of life. And I know you mentioned that you were commuting an hour and a half each way. I used to do a commute myself. And yeah, it adds up. I more and more as time has gone on, I value agency and having a higher degree of autonomy over my schedule, even if it means I have to be burdened in ways that are unique to having a small business.
Absolutely.
Over something where there's perhaps less upside and you're in more of a stringent environment and you don't have as much leeway.
Yeah. And I mean, so with your commute though, I'm very curious because for me, I commuted from, I work and live out of Brea, California, so North Orange County. So I would commute from Brea to Koreatown, so through the heart of it in downtown Los Angeles. And I did that for, gosh, I want to say 3 years. So, but I had phases of it. Like, I don't know, do you think about, it's kind of funny to look back on. Did you have like phases of your mentality where at the beginning you were like, oh man, this is my time for myself. Like I'll take advantage of this. I'll get to decompress before I get home. I'll be, able to kind of go through like, yeah, there's traffic, but at the same point in time, like, hey, it can't be that bad, right? That was like the first year for me. Then the second year was, you know what? Instead of driving, I'm going to take the train. I'll take the train. What a great use of public transportation. Like I won't have to drive. I'll be able to read. I read more books on the train than I've ever had in my life, which probably was one of the catalysts for me to actually go out and make a decision to start my own business. So I kind of say it jokingly, but that was a huge, huge part of me kind of learning more about myself, right? But I'm sitting there on the train going, this is not so bad, like, oh, I'm just reading. And then the last year I was like, this all sucks. Like, who am I kidding? Like, it is not worth it for me to do that. So did you have something similar where you were just kind of trying to kid yourself and then it helped kind of propel you to make the decision, or were you doom and gloom from the beginning on that?
It was kind of just a necessary perfunctory thing I had to do each day. It was funny. I was stationed in Lemoore, California, at the Naval Air Base when I was in the Navy. For those who aren't aware of where Lemoore is, it's about 45 minutes north of 45 minutes, give or take, north of Bakersfield. And that was actually where they filmed Top Gun 2.
Oh.
They actually filmed it out there when I was there. I didn't see them filming because I was on the other side of the base, but I used to commute from there to Clovis, which was an hour, so nothing
Yeah.
crazy. Of course, yours was a little longer, but a lot of. I mean, I probably could have listened to more podcasts, listened to more music, but
They probably
um,
weren't that prevalent then, though. That's the interesting part.
yeah. But that being said, it gives you time to reflect. And I just remember just right when I get into bed in the evening, I'd conk out immediately. I just fall asleep. You're just exhausted from the drive, right? It's just, and
Oh
it's
yeah.
crazy how even in being a car where you don't feel like there's a whole lot of like stuff you're doing, but it's so taxing on you, like because you're
Oh, big
constantly
time.
like, you know.
Well, it affects your health in a lot of different ways, I think. But it's just the mental capacity. You're as second nature as driving is. You got to pay attention. You got to make sure you're staying alive. There's no real reason to do the commute if you're not going to, if you're falling asleep at the wheel. So I felt that same way. I mean, I think you get home, but to me, it wasn't a proper way to decompress from work, right? It was just, we work in a high paced environment. Having a lot of conversations. The work is never done. I always tell young people in this space, I'm like, have a cutoff time to where you're going to finish your work by and wake up tomorrow, because I guarantee you the work's not going to be gone tomorrow either. So if you're trying to get all the way caught up, like, be thankful that you can't be, and also take some time to kind of have that cutoff, because when you're young in the space, you just want to hustle. You just want to hustle as much as you can, kind of caution to the wind. But I would get home from work, and after sitting in, an hour and a half, hour and 45-minute commute, and like I would be as stressed as, if not more, by the time that I left the office. And I was like, this can't, that's why I went to the train, and the train kind of was a good outlet. But, then you could get into a couple precarious situations there on the train, and you're like, okay, I don't want to be stabbed on the Metro link, but never really came to that. Came close, but never came to that. And so, you're just sitting there going like, what is worth it to me? Do I want to make, for Brad and I, it really was, can I see myself, um, even if I was making more money in 5 years, can I see myself mentally and physically being able and being excited about doing this in this form and fashion, right? We go to a lot of networking events, and randomly I realized, I'm not the youngest person there anymore, which is really odd, and so a couple of 20-something-year-olds at this commercial event asked me, like, how do you withstand, being in the industry? And I didn't rehearse it, never thought about it before. Some of those, shower moments kind of come to you in real life. But I said, are you excited about what you do? You don't have to be happy. You're not going to be not stressed. It's not always going to be good, but are you excited? Do you kind of enjoy it? Do you have an excitement about the service that you're offering? Because if you're excited about it, it'll get you through the tough times, right? And that can be circumstantial. That can be very job specific. So I realized, like, I was excited about what I was doing. I was not excited about the avenues in which I had to get to go and do that. I thought there was a better way, for us to be able to experience this. And yeah, so it's just kind of interesting how you have that evolution. But excitement's a huge thing for us.
You mentioned about some of the books that you read when you were on the train and such. Could you share
Yeah.
perhaps some of those books, or books in general, or podcasts or material that you consume that's been instrumental to you?
Yeah, so I got on to a couple of, like, subcategories of wellness books and such. I think the Stanford has a bunch of studies. Hopefully it's Stanford. It's been a while, about the happiness effect on the workplace. And so there's a couple of books. I'll probably combine the the titles, but it's literally called the happiness effect, and it kind of goes around the idea of your nonverbals and the way that you communicate with the people that you work have more of an effect on their well-being, and therefore the well-being of your organization, than you would kind of think, down to smiling when you speak, asking somebody how they're doing in a way in which is not just like, hey, how's it going today, right? And how they've done studies at large corporations, I believe IBM and Cisco, some of the Silicon Valley, behemoths of the time, and kind of can really gauge and um, track positive change within an organization. And at the previous company I was working for, we were going through a transition of, managing more people and trying to make that next step, and, having to deal with more of the interoffice issues and stuff of that sort. So that was one that really piqued my interest. The inner game of tennis was an interesting one, and about how, showing people, and less talking, more showing, is really something that people can learn from. That was super interesting, especially now I can carry that forward with kids, that I have at young ages, and teaching them how to play sports. Start with Why, Simon Sinek is a great one. Unshakable by Tony Robbins. Is that Tony Robbins? Yeah. Tony, yeah, that's what it is, right? I think. And what else? And then I think Negotiating with Power. Negotiating with Power is a great book. That is a book about taking real life historical events and explaining the negotiation tactics that they utilized and how you can implement them into your day-to-day, down to how Vietnam, the truce about Vietnam, was negotiated around, I think it was either a triangle shaped table or a circular table, because there were three parties involved, and they didn't want to have two parties at the heads of the table and then a third party feeling passive, right, or feeling inferior to the rest of them. So just weird situations, so those are the books. I recently, in the last couple of years, I did a mastering sales course through Northwestern that was really, really valuable, just to kind of understand more about the psychology of sales, and how, if you're in sales, people think about it differently than if you could tell them you're a consultant. But effectively, a consultant in sales is kind of the same thing. And if you're really good at sales, you want people to think of you as an advisor, right? But if they think of you only as sales, that's a mental hurdle that you have to get over. So we are always trying to learn, always trying to learn. I listen to podcasts mainly for entertainment purposes and perspective. But yeah, some of those books are, I fond memories of those books and being on the Metrolink train, and, thinking about what I'm going to do next in life.
As it relates to life and such, could you share, in kind of pivoting more towards the audience better understanding you, could you share an event that was monumental or that really changed your direction? I know you covered S&L Capital Group, so.
I look back, there's a lot of forks in the road, right? I think my initial interest in wanting to be involved in real estate was something that I just was kind of pulled towards, but I would have never told you I would have been focused in this space. I have zero experience in the conventional lending side of things. I tell clients all the time, it's very easy for me to be calm and collected on this side of the desk when you're going through a stressful closing, because I'm not going through it. When my wife and I bought our house in 2020, I was freaking out. It was one of those processes that I was kind of laughing, because a lot of times our clients are calling us for the advice about oh, what should we do here? We're getting pressure from the selling side, and, okay, everything's going to work out. Don't you worry. You're kind of the voice of reason. And so it was very surprising to me when I was going through that process that I needed that voice of reason, right? It was just kind of one of those things. And so getting into real estate was, I don't know if it was planned, but that's definitely one fork in the road. Making decisions, I was approached, throughout my time working at the previous company, with a large syndication company that was started out very small and was offering a position to join the team and have equity or whatever. Well, we didn't even get to the conversation about that because it was open-ended, but I was loyal. I was loyal to the company I was working for. I heard her out. She has done unbelievably well. And I just decided, I want to stick it out with the company that I'm working for. And so that I would think is another kind of fork in the road. And then a couple of years later after that, there was a little bit of shakeup, at the company we were working for. And I'd worked for what I considered at the time a best friend, right? And a guy who stood in my wedding, right? And he and his business partner kind of came to the conclusion that my best friend was going to leave the company. And so I was there with them for 5.5, almost 6 years, and saw the company grow, right? It's not that we didn't have setbacks. Every company has setbacks. Every small business has setbacks, but there was some positive growth there. And so I was hoping, that I would stay at that company and continue that kind of growth uh, path. But it didn't work out. I think when you're in small business, you realize that you want to listen to people about how you should consider running your company, right? Not how you should run your company, but you should have ideas and things that you should consider. So everybody can make a decision that's best for them, right? I think when you work in a small business, at the involvement that I had, I thought, you learn a lot of things that people do that you're like, wow, that's a great way to do things. You also learn a lot of things very quickly, similar to when I was working at corporate America, where I'm like, I think this can be done better, right? And so I think ultimately it's not my job or responsibility to force those ideas onto another company, right? And a small business owner, they have their way of doing things, and I think you kind of run into that issue. I think that kind of set us onto the path of saying, like, we believe in what we want to do and how we want to do it, and I think we can do this in a successful way that works for us. May not work for other people, may not work for the person that we had worked for. And so after about, I think it was 6 months after my best friend at the time left the company, we decided, like, hey, listen, we need to go out and do this on ourselves, by ourselves, right? And so I thought that was enough runway um, for us to go out. But you're part of a close knit group of people, and not everybody supports that decision in the same way that you would want them to, and it takes a lot of time to reconcile that. But yeah, so I mean, there's plenty of forks in the road, on that front, and you just look back on it going, would you have done anything differently? Possibly, but I don't know that I would. I think that I ultimately would kind of come to the same conclusions, make the same decision, and you know, I think it's been the best decision for us. Brad and I both, and I don't see how it would turn out any different.
How about as it relates to a person, whether that's personal or professional, who's had the most impact on you?
Oh, I think it's easy. It was that best friend. His name is AJ, who I worked for. Probably the hardest working person I've ever met in my entire life to this day. Um, Passionate about what he does, whatever that may be. Uh, Emphasized reputation is huge. You you can lose it quickly. So make sure you hold that to the highest regard that you possibly can. And so ultimately I've learned so much over the time of working at that previous company, um, that I've carried with me today. And you just get into a situation where the people around you, since you're so close with them, feel like they have to make decisions on who's right or wrong. They'll tell you that I don't know if you have any experience with this, but they'll tell you, like, I'm not going to stand in the middle of this. But their actions will show you, what decision they're making. And it's a hard pill to swallow. It's also hard for me because I don't really talk to AJ anymore. I think ultimately, like, I wish him nothing but the best. And I carry so many positive things from that relationship and working for him and being close with him for so long, that you get to a point in life in which you stop thinking about what went wrong, and you start thinking about, like, how good it was for the time that you had it. And I think that's a very hard thing to get to, right? Because those, him along with a few other friends, right? They were so close to me at that point, and I could have used that support when starting a business. But it wasn't meant to be. And in a weird way, I'm better for it. I'm definitely better for it because of going through those situations. Because everybody has a perspective. Everybody has a dog in the fight, and it's an interesting thing to look back on, and be, I don't want to say grown up enough, because I never consider myself a grown up, but grown up enough to really understand, like, things happen for a reason, and lessons are to be learned. And just because you may leave a bad taste in your mouth right now doesn't mean it all was waste. There was a lot of really good times with that previous company. There was a lot of good times with that previous group of friends, and you accept it for what it is, right? And just carry on. Just know that you tried to make the best decision for yourself.
And how about what you're most proud of so far?
Man, I am um, There's so many things, I think as you go through the journey of starting a company and the learning process, Brad and I were talking about this yesterday. It is almost humorous to us that when we look back on when we first started and we built this business model out, I looked at him and I said, so if we just do the same amount of business that I was able to originate, we'll be happy, right? What a joke that is, right? Like that should be fun. Like you never want to stay constant, like you're A, things in California are very expensive to run from a business standpoint. B, your quality of life changes when you have kids and a house payment and all those kind of things. And C, like we're not people that are complacent. So in a sales job, in a transactional business, right? It's never about the 10 deals you just closed. It's about what's next in the pipeline. And if you aren't constantly thinking about that, you are losing out on opportunities that you haven't realized you lost out on. So, your lead time in some of these relationships is 60, 90 days, sometimes even longer, right? I had a client who I talked to in 2013. I did one deal with him and stayed in touch with him. He called me last week with another commercial deal to see if we can do. So the lead times in this business are incredible. And if you're not constantly trying to better yourself, making relationships and connections, you're going to suffer 3 to 4 months down the road. So the things that I'm most proud of, we've put a huge amount of emphasis on service. Our company was built by Brad and I doing every single thing for an extended period of time. Most people who own companies would say we did that for too long. Last year, about this time, maybe January, we brought on a processor to work with us, Kristen. She's been nothing but amazing for us and allowing us to be out and about and do more things for our business and our families and everything like that. But, and we, in a way, wish we would have hired her sooner. However, I want to know everything about what we're doing. I want to be able to relate to people that we're asking to do those things, right? Like, we're asking you to do it. Tell me your unfiltered opinion about it. I can relate because this is what we were doing for 5.5 years, right? So I'm proud that we took our time in doing that. I think a lot of companies will put such an emphasis on growth that the minute there's turbulence in the market, it becomes a very slippery slope on what they need to do to be able to survive. And we saw that when transactions went down around COVID, when the secondary market put a pause on lending, when interest rates went up, and again, transaction volume went down, and you have these huge lending companies with massive workforces that they just don't have the cash burn is too big, right? So I think that keeping our business small business, being able to provide service, communication, all the things that everybody tells you they do, that is what we specialize in. That's what I'm most proud of. And I'm obviously, above all, proud of my wife, my kids, my wife. I always joke when I think that I've had it hard over the last 10 years. My wife got married to me, had 2 kids, all going through medical school, residency, a fellowship, and just recently becoming a full attending physician at UC Irvine. So when I think I've had it hard, not only does she blow me out of the water on that front, but yeah, so I'm very proud of her and what she's doing and following her passion and dreams. But the family that we've been able to create together, all while we're both doing these things, is something I think we should both be very, very proud of.
Love it. Love it.
Yeah.
And any parting words for the audience, any advice or any message that you'd like to put out there?
I mean, I think you always want to take a gamble on yourself, one way or the other. I think if you are a hireable person who has a drive to try and do something that will better yourself, there's no reason you should hesitate. Brad and I were living very similar lives at the time, and we've been talking recently about how we're very fortunate to where we have a network of people that we can bounce ideas off of. And that's really, really important in any business, not just real estate. But what comes with that also, people, fortunately and humbling for us, will come to us asking for advice about certain situations, rulings. Brad's very involved with the California Mortgage Association, so any court cases and stuff like that, they have the kind of the pulse on that, or career moves, or thinking about getting into a partnership. We have these calls in which it's very humbling, right? Where at one point I was a bushy-eyed, bushy-tailed, spiky hair kid at 25 years old in this industry, trying to figure it out. But I've quickly become kind of a calloused over small business owner over the last 7 or 8 years, where people value our opinion. And I think that you need to call on your network and be comfortable asking people about advice. That doesn't mean you do what they say. It just means that you need to consider it. You need to consider it from multiple people to get differing perspectives. And then you need to make the decision based on the risk reward for yourself. And I would just say betting on yourself as a young person is far better of a choice to make than trying to bet on yourself as an older person. Because I would say right now, if I was going through the same situation, I'm not sure I would be able to pull the trigger on starting my own company, because there's just so much more responsibility, right? And so you have to have that balance, but continue to learn, do things that interest you, make sure you unplug from work, make sure there's boundaries that you have that you can fall back on to be able to reset yourself. Reading is one of them for me, working out, staying active, coaching my daughter's softball team, stuff like that will allow you to reset in an enjoyable way. And we're in a stressful business. The government can make a lot of choices for us. So, interest rates could go up, World War III could start, the economy can go out. There's a lot of things that we have talked about where, the input that you put in doesn't guarantee an output. So when that happens, it hurts. I don't care if you're the owner of a business or you're a salesperson. It hurts. So make sure you have something to fall back on that is a constructive way to reset, or take your mind off of it and just continue to hammer those things. I try new things all the time in that sense, so that I can just be the best version of myself for my business partner, for my family. And I'm not perfect, but nobody is. So don't beat yourself up too much about that kind of stuff. And that's it. That's my words of wisdom, I guess.
And Corey, how can the audience learn more about you and get in touch with you?
Yeah. Oh, so one of the things that I've recently started, you can find us on LinkedIn, just by searching my name, Corey Siegel, or the company S&L Capital Group back there. So if you need our website, slcapitalgroup.com. Recently, I've started a Substack. It is Lend That Sheet, like lend that shit, but sheet, SHEET. The Substack is mainly, trying to generate information and articles, not a sales pitch on what S&L Capital Group is going to do, but just kind of pull off the experience that I've had in this industry for over a decade. I hate to be the guy that throws out the number of years that I've been doing this, but at some point you wake up and you go, wow, shit, it has been a little bit of time. So I just want to share some of the back end stuff. I think a lot of people, brokers who are actively brokering commercial deals and residential deals, may not necessarily have a full understanding of how the back end side of this business from an investor side works. And I do believe that presentation of your position in the transaction is important. And so what we like to do is just kind of peel back the layers of the onion to provide that info. And so you follow me on Substack at Lend That Sheet, and LinkedIn, Facebook, Instagram. Our company's up there doing some active stuff as well. And I'm on X as well under Lend That Sheet as well. So that's how you can find me. And yeah, we don't try to hide. So if you Google us, hopefully you'll find us.
Awesome. Well, Corey, thanks so much for being on the show today.
Yeah, appreciate it, man.
And looking forward to having you on down the road.
Hey, let's do it. Another 5 years.